Welcome to another edition of Zacks Rank Buy. I am Brian Bolin, and I am your aggressive growth stock strategist here at Zacks. And I got two more stocks for your aggressive growth radar screen. And today we're looking at payments. And why not? Everyone's got to make payments, right? And everybody's buying more. We're seeing that happen a little bit more. So we're seeing good numbers out of retail sales and expectations of things moving higher, cooler CPM data. So maybe rates are higher for longer, but not for too much longer. So let's take a look at these payment stocks that I've got lined up. So the first one we've got is F-O-U-R, F-O-U-R is the ticker. It's really Shift4 Payments. A Zacks rank number one strong buy. A for growth, what I love to see. C for value. Recurring theme for me in my videos today. So we're going to see a beat and a stock running up and away. So Shift4 Payments, providing payment services for merchants. Let's look at the numbers we'd love to look at. So here's your earnings surprise over the last year, and we got 4 out of 4, all beats, and generally good. A really big one here 2 quarters ago at 51%, but your average is 25% for the full year. That's great to see. So let's roll up now to see how our earnings estimates are doing, the basis of the Zacks rank. This quarter moving 79 cents to 83 cents. Next quarter going from 63 cents to 70 cents and then up to 78 cents. That's great to see. Full year going from $2.79 to $2.92. For the full year next year going from $3.35 to $3.81. All those arrows moving in the right direction. Let's go ahead and cheat a little bit, see what our revenue growth is. And I love it. I love it. Look what we got. 30% this year. 36% next year. Chugging along. $1.3 billion next year in sales. That's going to be outstanding. All right. So what are you paying for a stock that provides you 30% annual revenue growth? 23 times. I would call that a value to me. Price to book here. Value investors hate to see that 10 times price to book, but this, of course, is an asset slim business. Payments are just putting that little machine in there and off to the races we go. 2.3 times sales. I like to see that. All important margins. What are margins doing? Well, look at this. 3.6% to 4.3% to 5.6%. That is steady Eddie good growth with good top line growth, good margin improvement. Earnings estimates are going to move up, as we've seen. And that means the stock price is probably going to follow with you. All right, pandemic happens. We're all going to die. And this stock comes out as an IPO. Busts up to almost $100 and it finds the ceiling. Comes in the tech recession of 2022. And then this year, a little shift down and now a big bolt higher. So where are we looking? Where are we going? Well, we see good movement in between the estimates there, in between those spaces there. So I would not be surprised if the numbers keep on moving this stock up and it gets up to around 80 within a year or so. All right. So that's our first name in this Zacks rank buy for payments. And it was F-O-U-R if you didn't get it. All right. And I've already gotten ahead of myself. We're going to go to Paymentus, P-A-Y. These payment processors like to have words for their ticker symbols, I noticed. All right. It's a Zacks rank number one with a strong buy. It's got a B for growth and an F for value. So that good divergence that I like to see when the growth score is good and the value score is weak. I know already my growth investors are looking at this stock, or they should be. Woof. All right. Blabbermouth here. All right. So we're going to go from our recent beat here, and then it's been up and away, as we like to see. All right. So the numbers that we want to look at are already lined up on my screen. All right. Great. A beat. Well, no, that's a beat. We got estimate is 0, and they came in as a 2. So for some reason, we got the NA there. So that should be like a 200% beat. 200. All right. A penny better than expected. 7 big cents. Look at that. 7 big cents. And then 2 cents in the most recent quarter gives us a very big number. So big number here off a small base, because we're looking at, a penny, 2, 3, and then, you're getting 8 and then 9 cents. So I like to see that progression on our earnings history. So what has that done to estimates? Has management been able to temper Wall Street and keep them in check? And 4 to 5 cents, I'd say that's pretty good. 4 to 6 cents, very beatable, very there. 17 to 22 cents for this year. which is just about over. Next year goes from 21 cents to 25 cents. So we are making money here. Let's take a look at our growth, our all-important growth. And we see 22% for this year, 21%. Wish that number was just a little bit bigger. But you're doing it off a relatively small base compared to 4. We're looking at $735 million in sales for 2024. All right, valuation time. This one, not quite the same in the valuation perspective. We got 77 times. That is a big forward PE. We're growing at 19 times on the top line. We've got a 5 times price to book, half that of the last one, and 3.5%. And here's your reason for that. Margins are pretty thin here, 1.3, but growing, 1.4 to 2.8 to 3.82. As margins improve, boy, oh boy, this thing's gonna take off, and that'll help that extremely high price to earnings ratio. All right, so on our chart here, again, pandemic, we were all going to die. We come back, and this thing, debuts at the strongest part of the market, and tech recession in 22, and bouncing off the lows. Should have been a great stocks under 10 pick, but Brian Mullen asleep at the wheel as normal. All right, and here's our thing to look at, to focus on, these big gaps in the earnings estimate lines there. So that tells us this stock has plenty of room to run. Wouldn't be a bit surprised if this stock was $25 this time next year. All right, that's it for this time. Be sure to join us next time when we look at 2 more stocks for your aggressive growth radar screen. And until then, why don't you go to Zacks.com/promo to see all of our latest promotions.